Welcome to another Valuetown Fund stock review. This one is an exciting high-flying stock along the same lines as Tesla. This stock is also in Cathie Wood's ARK F from ARK FinTech Innovation because it is a fintech company, Square. This stock was picked by the people subscribed to my Patreon. Thanks to everyone who is supporting the show by subscribing to the Patreon. All the funds from that Patreon are used to invest in the stocks that you guys pick, to take a position in them. So we're here on the Webull. Thank you again for my Patreon supporters for subscribing to my Patreon. With your funding, I am going to deposit $250.49, which is less than the amount that I got this month from Patreon. However, it does make up for the front loan that I gave myself last month in order to have enough funding to do the option spread trading on Intel and GameStop. As usual, thank you for using my link below in order to sign up to Webull, where you and I get free stocks. The free stocks that I've gotten seem to be very consistently the Jeff stocks. I am an affiliate with Webull, so the stocks that I tend to get are higher value. As usual, I'm going to use 50% of all the funding that I get in order to buy into the Total Stock Market Index Fund and the Total International Stock Market Index Fund ETFs. Additionally, I've grown a little bit more confident in the Alibaba or placeholder position of the China specific large cap ETF. So I'm going to double up on this one. Now, let's take a look at Square. My first stop, as always, is looking at basic information on Finbox. Square Inc. is in the Information Technology IT Services category. It's the same category as Visa and MasterCard. Instead of reading out this company profile, I feel like a picture speaks far better. You may have seen these when you've gone to small businesses before. There's these terminals out there where you can scan your card and then you can sign on the screen, you can tap to add a tip or something. A bunch of them in small businesses, restaurants, and perhaps even for really small businesses, like perhaps taxis. Maybe you've used this particular magstripe thing. Very, very small businesses, or maybe even single person businesses, can just apply with Square, and they actually get one of these readers for free, which allows them to take cards. That's how Square got its start, in fact, by catering to these small businesses where it would be too expensive to get an actual terminal or register. Why not just use a reader so that you can actually accept cards at your local farmer's market or when you're driving a taxi? And how does Square make money? Well, each time you swipe your card using one of their terminals or readers, they charge the company a fee. Now, normally, whenever a credit card is swiped, Visa or MasterCard gets a portion of that transaction. Square takes a little bit extra on top of that transaction. So why would a business use Square over Visa if the Square service costs a little bit more? Well, you actually end up saving money as a business using Square, because instead of having to sign a long contract, which could be quite expensive with a credit card company, Square uses flat rate pricing, and you only get charged whenever cards are swiped, which means if you're a seasonal business, then those moments where you're not having cards get swiped, you're not getting charged for those, and they cover authorization, statement, refund fees, and it's just a deal that has been very, very good for small businesses, which is why you've seen widespread adoption of Square in these smaller businesses. On top of that convenience, there's extra services on top. Payroll services through Square. Square also has Square Capital, which facilitates loans to Square sellers through a partnership with an industrial bank. And that's one of two major parts of Square. The second major part is Cash App, an application for your phone which allows you to send money peer-to-peer and has also expanded to now allow investing in stocks, buying Bitcoin, and sending Bitcoin. just like the seller services, Square is making a little bit of money by whenever you send money with a credit card, you're getting charged a fee. Square charges you a little bit more past what the credit card companies would charge normally, but it would be very difficult to send money peer-to-peer without an app like Square in the first place, because it would be very difficult for your friend to receive money from a credit card. There are other services that could use that. Sure, Venmo would be one of them. However, Cash App has been very quickly growing. On top of that, Cash App also has the ability to direct deposit paychecks, which has been a reason for its very quick growth over the last year, because governments actually were depositing paychecks from COVID, and you could get it on your Cash App. This is a big potential driver for Square. Being able to take direct deposits means it could be a replacement to a bank. This is similar to how e-commerce and streaming platforms replaced Blockbuster. Now, Square replacing banks is still a ways to go and still very up in the air, but it's a possibility. Now, you might look at the price history of Square and go like, oh wow, I missed the boat on this one. As you can see from their IPO, December 2015, up until now, the stock has gone up 21 times. But have you actually missed out? This is still a pretty young company. It's been public for less than 6 years. And sure, it's increased by 21 times, but who's to say that it can't increase more? So let's take a look at their quarterly report. Here's why you would actually invest in Square, an upstart fintech company. It's for these growth percentages. Total net revenue was $4.68 billion in the second quarter of 2021, up 143% year over year. Now, a lot of that income actually comes from Bitcoin, so it is actually quite good that they break up their income and give the non-general accepted accounting principles measure, GAAP. They exclude the Bitcoin from the revenue. If you do that, net revenue was $1.96 billion, up 87% year over year. Oh no, 87% instead of 143%. That's obviously quite good. Gross profit was up $1.14 billion in the second quarter of 2021, up 91% year over year. Now, they're not always going to grow at 91% year over year, and this is probably this is the highest year over year growth quarter. They expanded marketing efforts a lot. There were stimulus checks being sent out. Quarter 2 2020 was when the entire economy shut down from COVID. They grew out a bunch of their business segments, both seller side as well as Cash App side. You can see just how staggering the increase in numbers were. Comparing the June 30th, 2021 numbers, quarter 2 from June 30th, 2020, revenue nearly doubled, subscriptions revenue nearly doubled, Bitcoin revenue, that's basically a triple. But it should be noted that the reason why the Bitcoin revenue was subtracted from the overall net revenue, if you wanted to look at that, is because the Bitcoin costs are very similar to Bitcoin revenue, which is to say that's a particularly low margin business. And sure, it's a lot of revenue on the books. However, it's not that much of a generator in terms of profit. But ultimately, when you look at how much profit has grown, that's nearly a double year over year. That's extremely impressive. Over on Finbox, I always like looking at the financials. It allows you to see a much wider time frame. And if you just quickly look at the revenue trend, that is certainly quite some revenue growth. Again, keep in mind that this particular revenue does include the Bitcoin transactions, which means the revenue looks a lot stronger than it perhaps should. If you take out the revenue from Bitcoin, the graph will look smaller, but also in a sharp upturn like this. What's perhaps more important is looking at the operating profit and then the net profit. Income is positive for this year and last year, and so is net profit. But a really interesting thing to note is why is it not higher? That's because the selling and marketing expenses have risen dramatically. It's one of those companies, Square, that could be making a much higher profit, but they are reinvesting that money back into the business in order to grow really fast. That's what all the marketing is for. They're getting people to refer other friends, and then they pay them a bonus for doing so that their Cash App can grow much faster. And that's actually one of the big benefits of fintech companies. The cost of acquiring companies is much lower than a bank. A bank has to run this huge, usually a pretty fancy building, but Square, they just have to pay you a little bit to introduce your friend. And also, anytime you actually need to send money to a friend, people start asking, hey, do you have Cash App? Or do you have Venmo, Square's main competitor? And your friend will be like, yeah, I have this. Or maybe they don't. And then you just send them money on Cash App anyways, and then they have to also sign up on Cash App in order to receive the money. And that's how the big networks grow. Now, the reason why my Patreon actually selected Square in particular is because some very, very interesting news recently came out about it. August 1st, 2021, Square announces plans to acquire Afterpay. This is one of those Buy Now, Pay Later programs, BNPL, which has become increasingly popular. If you haven't heard of it yet, that's fine, you're not too behind on the times. This is still something that is picking up popularity. I actually didn't know about it much myself because I don't go out shopping much and I usually use credit cards, so it's not something that I would encounter. However, at certain retailers, you have the option to, instead of using a credit card, you can select Buy Now, Pay Later using a service such as Afterpay, in which you don't have to pay for the good or service immediately. Instead, you get a payment plan, and this does not require you to have good credit. The payment plan is generally paid over a fairly short amount of time, like 2 months, and you pay every 2 weeks. And as long as you do that, you actually get charged no interest on it. And if you don't do that, you do get charged some fees on it. Overall, this is actually generally a better deal for the customer than a credit card is. The credit cards will generally charge higher interest rates and will generally charge higher fees. Now, it's worth mentioning that Square actually bought Afterpay for $29 billion, and this is going to be an all-stock deal, which means that if you're a Square stockholder, you may or may not be happy about this because this is a very big purchase. $29 billion worth of stock dilutes your holding in the stock, especially when Square pays a 30% premium on Afterpay. How did the market react to such a overspend in terms of that acquisition? They loved it. That particular day, after the announcement, the stock went up 10%. Now, this is actually markets being efficient to some extent. It might have taken a little bit of time afterwards to be like, oh, was this actually that good an idea? Oh, I'm not entirely sure it's that good an idea. Jury's still out. But the point is, this is actually a really, really big deal. This has all been the setup. How does Square make money? When customers swipe their Visa or MasterCard at their payment platform from the seller side, they have to pay a big amount of that fee over to Visa or MasterCard. But if they manage to get the customer to instead use a Buy Now, Pay Later program, they don't have to pay Visa a single thing. They keep all of those fees that they charge onto the store, and Buy Now, Pay Later programs charge a little bit more than credit cards generally. This is a big deal. Square is going to save like 1% to 2% of every single transaction. Instead of paying that to Visa or to MasterCard, they keep it, and they actually keep a little bit more because it's Buy Now, Pay Later. Buy Now, Pay Later also helps the retail store. Studies have shown that this does encourage and increase customer spending. Now, Afterpay is actually just a upstart company from Australia as well. It's not that big yet, although being valued at $29 billion does imply that you're pretty big. On the grand scale, Buy Now, Pay Later is still a pretty fledgling program. which may be why Square was so willing to buy them at such a generous premium. Square gets a foothold into huge retailers such as Urban Outfitters and Lululemon, and Square really wants to get in with these huge companies because at huge companies, customers spend a lot more money, and that means Square gets a significantly larger cut instead of having to serve these smaller customers. This may be the beginning of the end for traditional credit card payment systems. Because why use credit cards when you can buy now and pay later? Now, that's a really bullish interpretation of Square, but I just wanted to bring forth the possibility that this is a real disruptor. Companies that disrupt the status quo, those are the companies that have exponentially growing stock prices, such as this. Square actually has a lot of growth potential as well. They're currently majorly serving the United States, but the rest of the world is still fairly open. And Afterpay is also going to be used in Cash App as well, where instead of using credit cards to send money, perhaps you could use buy now, pay later when sending your friend cash, and then you just have to cover the payment to Square afterwards. And, it doesn't have to be your friend. It could be Cash App to a business as well. And the business still pays the fee, except instead of paying that credit card processing fee to Visa or MasterCard, Square gets all of it because they're the ones covering the Buy Now, Pay Later program. Additionally, Buy Now, Pay Later, sure, sometimes people are late in paying. You get to charge them late fees. So that all sounded really bullish, but it's at this point that we look at the discounted cash flow model using the analyst numbers. I entered my assumptions and I was fairly aggressive, I'm going to say, on this one, because I do see the bull case scenario in Square. So here's the assumptions I went with. For the beta, I used 2. It's actually a little bit higher than 2 right now for Square. Beta is basically how volatile the stock is, how much it moves whenever the stock market moves. Yeah, Square is a very volatile stock right now, which is why I'm actually asking for significantly higher than the general S&P would return. I would want Square to return 12.2% per year. There's a lot of uncertainty about Square, whether or not they're going to be able to pull off the dream. Are they going to be able to topple credit card processors? Are they going to be able to topple banks? Because that is another place for growth that I hasn't mentioned. They could really expand their customer relations in terms of banking, in terms of consumer loans eventually, and perhaps actually their stock platform could take off. So the higher discount rate means that future cash flows are going to be priced at a lower amount than if I were to use a lower discount rate. Also, how much the business is going to be sold for in 5 years is going to be discounted at a higher rate, which means it's not worth as much today. Because the total value of the company is worth however much all of its cash flows are worth in the future. If you discount those cash flows by more, a company is worth less. I use the analyst numbers provided for the revenue and the earnings before income, taxes, depreciation, and amortization, which had a lot of analyst coverage for these 3 years. So I was like, well, I don't really have any better insight into how much revenue will grow in 2022 and 2023 than the analysts. 2024 and 2025, because the analysts dropped off sharply, I did use my own numbers. I rounded it to a nice even 17% and continued the earnings growth. Now, the big point of contention here is, and this is where a lot of variability goes into Square stock. What is the exit multiple for Square? This is still a fairly new company, and they're a very high flyer. Currently, their last 12 months multiple is 287 times. And what does that mean? Well, more commonly, you see price to earnings multiples. The price to earnings multiple on Square latest quarter was 213 times, which has decreased from 484 times from the first quarter. That's a lot, paying 213 times. Back in Buffett's day, I believe he was looking for PE ratios of 10 or 15. But we live in a new world economy, potentially. And this is a very, very fast growth stock. So the question is, what is the multiple going to be in 5 years? And that is a very, very hard question to answer. So you look to comparisons, and there's actually fairly good comparisons right now. I've highlighted the main ones. PayPal is a much more established fintech company. It's been around for quite a bit longer. You could also compare it with Visa and MasterCard, which are also trading at very high multiples right now. Visa at 31 times of EV to EBITDA, MasterCard at 36 times. PayPal is currently at 64 times. So even though this is actually one of the highest multiples I have ever used in one of these discounted cash flow analyses, I think that it's reasonable to say that in 5 years, the exit multiple, which is basically the price at which you would sell this company to another company, to just multiply the EBITDA by 50 times, that's going to be the price that you would be willing to sell it. And then you discount that back to the present day, and you get a much lower amount. You would actually, given my fairly high discount rate of 12.2%, that is worth 60% of this large number. So basically the $161 billion, 60% of that would be today's value. Compared to the present value of the cash flows, the terminal value ends up being a drastically larger amount. So really the only thing that even mattered in this analysis was coming up with a reasonable EBITDA exit multiple. And what's good? Is it 40 times? Is it 50 times? Is it 60 times? Is it 100 times? Is it 20 times? Your assumptions will vary, and you should certainly make your own. It's kind of the Wild West out there. All of those analysts out there probably didn't necessarily use discounted cash flow models because the present value of cash flows matters so little compared to what this exit multiple is going to be. We really have no idea what this multiple is going to be. So this is really a story stock. You have to decide and assume that if the company continues its high growth trajectory, that the market will feel like it is worth 50 times EBITDA, because right now the market thinks it's worth 287 times. And that is, of course, going to go down over time. The question is, how much does it go down by? And I mean, the closest comparison I can come up with is PayPal, Visa, and MasterCard, probably somewhere between 31 and 64. 50 sounds like a nice round number. So all that said, if I use 12.2% return that I desire from Square, as well as a 50 times EBITDA multiple, fair value I come up with is $226 for the stock. That's how much I would be willing to pay today if I made these assumptions and if these revenue and EBITDA numbers are in the right ballpark. And I'm going to say this right now, by the way. These revenue and EBITDA numbers are not going to be correct. The reason for that is because these numbers are assuming essentially that the no stocks are issued, which is patently incorrect because stocks will be issued in order to acquire the payment company, Afterpay. The story that we're going to tell is one of the following. Square manages to succeed at continuing to grow fairly quickly. Square manages to at least rattle up some ambition of being able to incorporate all this buy now, pay later to actually take some amount of market share away from Visa and MasterCard. Square manages to greatly popularize the Cash App program across not only the United States, but across the world. Square manages to get into higher sale retailers so that the point of sale is used a lot more for Square stuff. This buy now, pay later acquisition, it really gives them a legitimate chance. And right now, it's just a chance. But it's a real chance to potentially disrupt the credit card world. You might make the argument that Visa and MasterCard can just use buy now, pay later programs as well. But the big reason why this is so much better for Square than it is for MasterCard and Visa is that with Visa and MasterCard, they would be cannibalizing their own credit card. With Square, instead of paying Visa and MasterCard for transactions, they get all of the money whenever the customer buys a thing. They do have actually a bit of an advantage ahead of some of these credit card companies and just other companies because they have managed to integrate themselves into a lot of businesses because those businesses are using Square terminals already. So Square can just immediately put on, hey, you can buy now, pay later in this terminal. Square has the Cash App. They can just put buy now, pay later in all these Cash Apps. There's a lot of areas where Square could grow, and it's possible that they grow in all of those areas. And if you make all of those assumptions, then Square could potentially be one of the biggest companies out there. Give it a decade or two. We're talking about it could be one of the top 10 in the S&P 500. Now, obviously, that gets into mega bull territory. But really, the general idea here is, yeah, valuations are nice and all, but can you really properly value Square? It just depends on how well they execute on things and whether or not they can actually take market share away from banks or credit cards. Now, value investors don't like hearing that, and they don't like seeing terminal EBITDA multiple 50. So for the most part, it's too early for me personally to invest into Square. But this is the Valleytown Fund Show, and I must take a position on this. And boy, do I not want to short the future. I do not want to be a bear on this one because I do see potential for Square. So I'm going to do the same thing I did with Tesla. It's going to be a very, very cautious buy and not necessarily update it. Just let it ride for a very long time. And maybe when they've proven themselves for a longer period of time, when the revenues increase over a longer period of time, when buy now, pay later does better, when customers actually start considering Cash App to be a valid alternative to a bank, maybe we'll revisit this. Sure, the fair value is lower than the current market price, but I'm making the argument that this is a story stock. And yes, you don't actually just pay any amount for growth. You have to pay a reasonable amount. And how much is reasonable? Boy, is it hard to tell with a company that's growing this fast and isn't making that much money yet. Out of everything that Cathie Wood is invested in, I actually believe the most in two areas. The first is robotics and general automation. The second is financial technology stocks. Because I do really see, having worked in a bank before, I do think that banks have the potential to be dinosaurs, and they could be replaced by fintech. And credit cards, for too long have they charged super high fees. Why use credit cards? Maybe buy now, pay later is the future. That said, my conviction on this stock is very low. I almost was tempted to buy it into my personal portfolio, but I am a fundamentals investor and a value investor, and this stock is still too early for me. So it's a bit of a dream, and it's a very, very long-term hold. Not buying this in order to sell it for a quick profit, buying it a little bit because I believe in it, but not enough to be paying this much for that many shares. Best thing I can do is buy a very small amount of the stock. And that's only because the Valleytown Fund must take a stance on all the stocks. And a very quick update just before I actually ended up buying some Square. There was a big move on between September 7th and September 8th where Square fell 4%. Why is that? Well, some of it can be attributed to PayPal on September 8th acquires Japan's Paydi for $2.7 billion to crack the buy now, pay later market in Asia. I mean, if it was such a good idea, then of course the other fintech companies were going to do it as well, right? And that's the thing about these story stocks and these potential disruptors. You never know which one in particular is going to be the winner, because everything I said about Square, it is possible that PayPal could be the one to do it, or any number of other fintechs. But again, what Square does have going for it is that it has actual hardware which the vendors are using at all these small businesses that it's used the last many years in order to set up. So Square is going to end up being a similar story to Tesla, where it's a story stock. It is overvalued. However, since the Valley Town Fund must take a stance on all the stocks, and I don't want to short it and I don't want to take a neutral stance on it because both would actually be too risky, I am going to buy a small amount of it, similar to Tesla, which has gone up 7% since I bought it, in order to keep it at around 1% of my portfolio at this time, and it's very likely that I will not add further to it until it's become more clear which direction Square has gone. I will be buying 1% of the portfolio, about $25. That's 0.1 shares of Square. And we're off to the races. Go Square, go. The transactions I did, both on Square as well as the index funds for China and the total stock market and the international market, were all done September 9th, just before market close. And that is another high-flying stock in the books. Square was chosen by Patreon. Thanks again to all the subscribers to my Patreon. I use the link below. Join in, help support the show. This upcoming week's stock is going to be chosen by you guys on YouTube. I have a pinned comment. There's going to be a bunch of stock picks on it. Choose the one, upvote the one that makes a lot of sense, or post your own stock pick along with hopefully a good reason on why you think that stock is interesting. Most upvoted one will very likely be the stock reviewed next week.